Good morning, guys, and welcome to the 188th edition of Talking Bull. My name's Ian Coleman. I'm joined by Steve O'Hare. Morning, Stevie.
Good morning, mate. How are you doing?
I'm all right.
Excellent.
Not bad. Little bit. Just watching that gold chart this morning. I know we touched on that briefly off air, but it's quite a decent pullback, isn't it?
Yeah, we had a little bit of a flag forming or a pennant forming yesterday, and I was looking. Yeah, I was looking for a break of this really to get some away. 2015 was the level I thought would be a clear break, which is the low swing low on this green candle here from the 7th of August. This 4-hour chart, and yeah, we broke it overnight. Actually this morning. So last 3 hours, it's been selling off quite aggressively, which is, it's quite common after a decent rally to have these.
What sort of percentage move is that?
Well, I think just on the last 4 hours.
Well, just from top to bottom, top to that swing low.
Yeah, I mean, 4%.
Yeah, it's decent.
Yeah,
isn't it?
yeah, it's all right. I mean, it's all right. I mean, plenty of room to come lower, and it still won't
I'm going to say
sway me away from being
35% or whatever. It's not really a big dent in the armour, is it? It's weird actually, because the dollar index gone nowhere really. It was quite choppy yesterday in the dollar. It's just sort of sideways price action at the moment.
I don't know. I don't think we've got triggered on. No, we haven't got triggered on this silver trade. Looking to sell a bit of a rally, but silver's not having the same sort of reaction. It's still holding above this candle. So you still got like 80 ticks on the downside in silver before it catches up with gold. And again, it sort of comes closer to the gold-silver ratio, the general alignment. We've talked about a lot. It got out to 120 times. So gold was 120 times more valuable than silver, and it's pulling right back now. So getting more towards the general or the sort of like the average. Yeah. So I think it's 60 times. I think is the mean. So I mean, I was a bit gutted about that yesterday. Looking to celebrate, and then I did it in the Gunter Head Challenge as well. Sort of selling it in.
The
ones that obviously the markets are looking pretty decent are the equity markets. They've taken a nice flip to the upside and are pushing higher this morning. So the US came in yesterday. We had a little bit of a pullback. Nasdaq lagged, but it's been a while since it's lagged behind everything else. So that wasn't a real surprise. We managed to sort of like buy the dip in S&P and DAX yesterday in the equity indices. And they've pushed really nicely higher. Overnight we were sort of selling APAC indices, so they're not looking great. But we'll sort of.
Have we had some news out then for that? That's a hell of a 1 hour candle.
I mean, I can't really see. China's passed a resolution to continue Hong Kong leg cooperation, whatever that means. China votes to extend Hong Kong lawmakers' term for a year. Reiterates warning to Japan against Hong Kong interference. So that's not really good news. So it won't be from that. And I think employment change was sort of like quite a negative for sterling as well this morning.
Yeah, it was. I was going to talk about that in a sec. It was down 90k. It was expected to be down. Well, expected to be a build of 10k, and it came in at 94k. And also you had Dave Ramsden, who's from the B of E. He's given an interview to the Times saying that if the economy falters and slows down, then they will step up QE. So quite negative comments for sterling this morning. But again, it's not exactly collapsing. But I thought Euro sterling was quite interesting. But I'll share my screen and just waffle on from there. So this is a dollar index. This is what we talked about yesterday. This 261.8% fib and the previous swing high here. This will be the prime short entry area. Don't know whether or not we're going to get it. I mean, you can see sort of yesterday's price action. This is the 3-hour chart. It's just really consolidating. If we go to the daily, we can see that, you know, we've had a decent push up. I think the long term, we could see a turn in the dollar because we have got this morning doji star formation for this free wave, this free candle pattern here. But I think probably what will happen is we'll get up to this level, then dip lower, and then get some higher lows, and maybe, I mean, this is trying to preempt days into the future, but maybe get an ascending triangle formation that then pushes us higher. So I think for the time being, it's going to be quite choppy in the dollar.
Would be a decent double bottom on that dollar chart if it does play out. Like that.
It's not really. I mean, this is a decent impulsive move, and now we're just seeing this. I mean, you could even get sort of potentially a wedge on here, couldn't you? But I think sort of selling into dollar strength for the time being as an intraday idea is probably favourable. But yeah, I'm sure you could play this either way, to be perfectly honest. And I think that's going to be what we're going to see. We're going to see selling rallies and buying dips. I mean, you've got swing high here, 93.10, which will probably act as support as well. So
yeah,
a bit of range trading, really.
Yeah, more for a short-term perspective. I think you're right. I think selling into rallies below 94, and if it breaks 94, then go with it. It's sort of that double bottom will be formed, and could be a bit more to it.
Yeah.
Obviously, just getting that small percentage rally that we've had it's not much of a rally if you compare it to the actual overall sell-off. It's
the sell-off's been dramatic, isn't it? I mean, look
23rd of March. It's off nearly 9.5%.
Yeah, that's the monthly chart. So you had that massive ranging candle, obviously, when all the shit broke loose in March. And then we had a bit of consolidation and then a really decent move to the downside. I mean, longer term players will probably look at an A, B, C, D or sort of a deeper correction there, I would have thought. I think that Marabuzo level from last month, which is July, continue got these swing lows here as well. I mean, that would be a decent barrier to the upside, which is 95.38. And if we go back to this chart, I think that was around about where the I don't know why my son does that every time he leaves the house in the morning. He rattles the front door for about 10 minutes to see if it's closed. Very bizarre.
A bit of paranoia that seeped through from your loins.
Probably. So that double top formation, double bottom, if it breaks there, which is 94 the figure, strangely enough, the measured move target is 95.43. And that Marabuzo level is around about 95.38, so that'll be a lovely upside target. Again, just trying to think days, not hours ahead at the moment. But and then the rest of them, let's have a go over to here. We've got some bespoke support here, but the medium-term bias is to the downside, I think, now for euro dollar. So we're still trying to sell into rallies. It's a little bit different for cable. We've got a swing low and some bespoke support here. So we did see that sort of drive lower first thing in sterling, but it's buyers are just coming back into the market. This was quite interesting. This was just what we were talking about yesterday, this descending triangle formation. We've actually got some bespoke support there at 89.70. So even though it broke out of this triangle, it hit our bespoke support and it's just bounced back up. So today I'm only looking at selling into quite sort of decent rallies, and we've got bespoke resistance up here at 90.26. Sterling Swiss is -1 correlated, or virtually -1 correlated with euro sterling. And although this shows a bearish picture, if we go to sterling Swiss, that also shows a bearish picture. But so one of them's out of line. So just got to be a little bit careful in just using our sort of swing lows and our bespoke support levels, trying to find them lining up basically to get decent risk reward, because obviously they can't both be pointing in the same direction. So one of them's got to be wrong.
Yeah, I think the cables for me is obviously I've got a monthly chart going back quite a while, and it's just it is like decision time there. Look, you've got this. I mean, it is a very long-term chart. And previously, you would have had a trend line drawn in or a potential trend line drawn in there, which it broke through nicely, then reacted lower.
Yeah.
So it's this is a trend line. There's 3 points in it. You've got the top, second, third. But you can sort of, you drill down, it's sort of like it's tried to break above it and reacted lower. So it's got this. I think it is decision time, like you say. It's for me, 130 feels a little bit toppy in cable.
Yeah, 132 is that swing high, and then I think there's a 78.6% fib around about current price action. So it is it's quite a pivotal level, I think.
Yeah. And again, I'm sort of, I think this is, like you say, it is just pivot. That's it. We're sort of above here, above the 132 level. You know, you're looking at targeting the 135, then potentially 143. I mean, for me, sort of UK. I mean, everyone's in a dire position really overall, but so here you know you've got the 136 level is a 38% retracement. That's not a big retracement by any means.
No.
So yeah. I think it's definitely one to watch. Could be quite exciting over the coming months.
Yeah, I think the longer time frames are all sort of quite at key levels. He's just trying to time the turn. If you're going to get the turn, and that's obviously the hardest bit of the whole thing, isn't it?
And it's just having that patience to sort of, or you know, and not sort of think, oh, I'm missing out. I still feel equities are a bit bubbly. And need that sort of, but again, it could be a few months before we see the real decent sell-off when all the money that's been thrown at the system to support it starts to get forgotten about. We just print more, it's fine. Print more.
Negative interest rates next.
Well, that's it. Yeah. You know, where we're going to stash the cash if actually cash exists when we sort of like in a few months' time.
I haven't seen any pound notes for quite a while.
No, just gold nuggets.
gold nuggets, and everybody going like this. I don't even think, you know, I had a drive out yesterday afternoon. It was quite a nice day, and I had to drop Tracy off somewhere, and every single pub en route or every single restaurant en route was absolutely heaving. Everybody sat outside because it's know, this meal deal, whatever, it's cheaper to eat out than it is at home, I think, at the moment. So
it is.
It's crazy. And you know, some pubs that you wouldn't even thought would get anybody in them, but they're all mobbed. But then again, I do live up north and we do like daytime drinking, so it's, it's maybe a bit different elsewhere. Let's have a look at I've actually managed to get the spreadsheet working, Steve. I bet you're slightly impressed.
I'm shocked. Yeah, I don't know how long was Joe on the phone to you to do that for?
It's a video that goes on for 25 minutes, and I've watched it 4 times up to now. I've actually wasted
2 hours of your life.
Nearly 2 hours of my life. I'm still going to have to ask you a question about it later because it's something to do. He keeps on going on about drag and drop. I haven't got a clue what he's talking about. But
drag and drop.
Yeah, the old drag and drop. But so it's taken me so long to do this that I've not been able to post any videos. So. I'll wait for Joe to do those when he gets back. A big backlog. So anyway, yesterday I should talk about Friday's trades, I suppose, because we didn't cover them yesterday.
I didn't know whether.
Oh, sorry, mate. Because I didn't know where the spreadsheet was. So these were Friday's trades. Joe went and bought Euro Aussie, and he had a nice lift in there, 77 ticks, 1.4R. So that was quite decent, nice move up in the P&L. I went short of Euro Sterling and went short of Euro Sterling again yesterday. It was quite strange here, so you can see the way that the correlation didn't work with Euro, because I was selling Euro against Sterling. And Joe and I actually joked about it in the morning and said, well, the trade must be Sterling Aussie. And of course it would have been if you were selling Sterling, selling Aussie and buying Sterling. that would have worked out, because obviously the euro correlation went out of here. Because we both had small. Well, Joe had a decent winner, I had a small winner, so we had a nice tick up anyway. 1.8 R on the day. Yesterday, as we were saying previously, I think that was just about sort of timing and maybe a little bit of tight stop on gold, because it did have a decent reversal. So Stevie went short of gold yesterday, and got stopped out -1R. And I kept on with the euro sterling trade idea, and managed to get 1.1R. So we had a tiny tick up in P&L yesterday. And if we look to the daily sheet, here we just, at the moment, we just, like I said, we had a decent 1R tick up, but we're flatlining. I think we've got to get above this previous resistance to get another move to the upside. But we've had a drawdown period. We're flatlining. Hopefully, we're going to get another lift up pretty soon.
I keep thinking Head and Shoulders.
Oh no, don't say that. Really, I can see it. Left shoulder, head, right shoulder. We've actually broke the neckline. We're just coming back to retest it. Is that what you're saying?
No.
And we're having a massive move down to about 49. No, of course not. That's definitely not what's going to happen. Have you got anything that you're looking at today, Stevie?
Yeah, it's a bit sort of tricky today. No, I mean, have you got anything right on it now or not?
No.
I mean, I can.
That's why I'm.
Okay. I don't really want to sell the precious metals unless it's sort of better risk reward if it rallies a bit. So, I mean, you had.
You know what?
I mean,
I don't mind having a go first if you want to have a flick around, because I think we're going to see a little bit of risk. I know we've seen a decent move up in indices this morning, but I look at a lot of cross-currency baskets. These are called basket charts. So basically, you've got dollar, euro, sterling, Swiss, yen, CAD, Aussie, and then to use them as a combination. So if I'm looking at euro Aussie, I want to see, euro Aussie as an example, I want to see the euro basket move into the downside and the Aussie basket move into the upside. It's not quite as simple as that, but what I am seeing at the moment is the potential for some Swiss strength, and also the potential. So these outside, I talk about TD flip a bit. We've got a 6-hour outside bar with a TD flip, which I think looks quite promising, and also exhaustion counts and whatever you're on yen. So I think yen and Swiss are going to start to move to the upside, which normally happens when we have risk off as their safe haven currencies. So I'm going to look at this. This is dollar yen. And although we're trying to buy the dip because it will form a very nice Gartley pattern at 104.67, as long as we don't break this swing high, which is at 106.47, then I believe we should see this CD leg form. So out of all the things that I'm looking at this morning, this is about, as a gun to the head challenge, it's about the best that I can find, really. And I'm going to have to leave it just above the swing high to make it decent R. So I'm looking to get short of dollar yen at 106.10, targeting 104.67. And I've got a 40. Let's give it a 41 tick stop. That's a bit silly otherwise. So 106.51 the stop. So going for 3.49. If it plays out. But remember, this is a 3-hour chart, so something drastic is going to have to happen today. I think it's more likely over the next couple of days to get down to that sort of level.
Okay.
Stevie?
Yeah, I suppose the only one I can really sort of contemplate, I don't know why I've got a 15-minute chart here, is this. I'm looking to buy oil on a dip in front of this swing low. The target area is around about this 42, 45 level where we're not far away from now. So we've had a bullish it's put me right off that last hour of trading. Has put me right off. And because I'm sort of like thinking equities look like they could just like carry on. That's I've gone, mate. I bottled it completely. Okay, let's go for this. Let's go for copper. Now, if the equity markets carry on going, this will sort of pick up a little bit as well. We've got a bit of a flag formation here. And I'd prefer to buy a dip right down here because I'm sort of, it is quite a volatile little thing at the moment. But I'll jump in here and buy copper at 284.60. Let's say 65 to 84. 284.64 trading, 62 trading, 284.65 I'll buy it at, and I'll target a move like that, and I'm going to keep a really tight stop. Let's keep a stop. I don't want to get stopped out live on air. So 282.65.
It's happened before we finished.
Yeah.
And that's a big stop. That's better.
200 and 700. So looking to target a move to 291.65, just back up into these this resistance level up here. So yeah, basically just buying the bottom of this flag. If we break that flag, then you'll have a the projected move is a potential move. What you do, la-di-da. Yeah, potential move right up there.
Yeah.
So yeah, I'm going for that. Long at 284.65.
Good luck.
Cheers.
So economic events, as we said, we've had claimant counts out this morning. The claimant count change was expected at 10k, coming at 94k, but the unemployment rate was slightly better, expected at 4.2, and it was actually unchanged at 3.9. So we have seen a bit of a mixed bag of releases there for sterling, but like I said, we did get quite a decent push down first thing from the Times story about Dave Ramsden and QE, etc., etc. The rest of the day, not a great deal to look at. We've got the Zoo survey that's in 50 minutes, like Steve and I were saying yesterday, used to be a decent economic release. I think it's largely ignored these days. And then overnight, we're going into Wednesday, we've got RBNZ, New Zealand interest rate decision and statement. So obviously be careful if you're trading Aussie or New Zealand. And then the press conference at 4 o'clock in the morning. Then we've got a barrage of UK figures tomorrow. So again, I think we might see some subdued trading today, especially with regards to an outlook on the dollar. There's nothing really in the way of dollar releases. We've got PPI, but it's really is a third tier data release. So yeah, I think we're going to pretty much consolidate for the day. Just look at those key levels. I think you could play this market, as we were saying earlier, sort of two ways: selling into rallies, buying into dips. But we will wait and see. Anything else to add, Stevie?
No, not really. No, I'm looking at sort of like a few oil headlines. Saudi Aramco to press ahead with plan to boost output capacity. Bearish for oil if they do. But obviously everyone waiting on the US to sort of come up with some sort of stimulus package. So a little bit of expectation. Yesterday picked up a little bit, but nothing yet. Yeah, apart from that, we've bought them for long enough, 25 minutes. That must be a record.
So. Okay, mate.
Yeah. Wake up, everyone.
Yeah.
Get back to your screens.
All right. Well, have a good one.
Cheers.
And we'll speak later on. Cheers,
right,
buddy.
cheers, mate. Bye.
Bye.